Hello, everyone. Welcome back. Welcome back to the chat room. My name is Ed Ponzi. It's great to be here with you today. And ladies and gentlemen, we finally saw some movement in our Euro-Swiss trade. So I wanted to get with you right away on that one so you can know what's happening. Look at the big green candle there. We hit our first entry, our second entry, our third entry. We never quite got down to the fourth entry, and now this thing took off. And will it continue or will it pull back from here? I honestly can't say, so I've let a little bit of it go, and I'll buy it back if it slides back. So basically, I'm 2/3 in, I'm 1/3 out, but here's the thing. When it comes to this type of trade, it's very different from any type of trade. We're talking about an intervention style trade. It's nothing like any of the other strategies. So, when I exit on these, I exit based on, not based on technicals, because I think I explained before, the price that goes up isn't necessarily based on true buyers and sellers. There's a central bank involved here. There's artificial support levels involved here. But you saw the big spike. What happened? Well, let me explain. You might recall that I believe it was last week when the European Central Bank had their meeting. The ECB went, now has negative deposit rates, and they even reduced the negative deposit rate deeper into negative territory. And I even got some great questions from some of you out there who were wondering, hey, does this mean that Euro-Swiss is going to collapse? Well, the Swiss came out and said, we could go with negative rates too. And that's what caused this thing to fly. If you look at it on a 5-minute chart, you can almost see where one of the officials, there it is. See if you can pick the spot on the chart where one of the Swiss National Bank officials said, well, we could always have negative deposit rates too. I'm paraphrasing here. But what they basically said is nothing is off the table. We've never said that anything is off the table. And they didn't mention the ECB, the European Central Bank, by name, but it's very clear that what they're meaning, the meaning of what they say is, if the European Central Bank can have negative deposit rates, so can the Swiss National Bank. And that caused Euro-Swiss to fly. Very nice movement there. Very nice movement. Very good to see. So I took 1/3 off. I'm still 2/3 in. If it floats back down, I'm going to use basically the same pattern for getting back in. In other words, if it floats back down to 120.50, that's back down to entry number 3, which is around a little bit above 120.50. I think it was 120.55 is where we took it. If it comes back to 120.55, I'm simply going to replace the lots that I let go on this rally. So yeah, it was a quick 50 pips, 60 pips, not that big of a deal in the big scheme of things, but it was nice to make a little change. And the truth is, do I think it's going to keep going up or do I think it's going to pull back? If I really thought it was going to continue higher right now, I wouldn't have let any go. But I decided to let some of this go because I really do think that this is an overreaction. As much as I like to see that reaction, I know in my, intellectually I understand that the Swiss National Bank, while it's being interpreted in the press and by the public that they said something new, the truth is they didn't really say anything new. The fact that negative deposit rates are on the table, well, they've been saying all along that everything is on the table. They didn't mention negative deposit rates specifically before now, but it's been understood that everything is on the table. The interest rate in Switzerland is 0, right? The central bank rate, the target rate for the Swiss National Bank is currently 0. So they can't really do much with that, but they could always do, if everything is on the table, then certainly negative deposit rates are on the table. If everything is on the table, then certainly quantitative easing is on that table somewhere. Maybe it's somewhere on the other side of that table, but it's there. Okay, it's there. So anyway, hopefully this will mean that that things will well, if it keeps going up, I win because I've still got some. If it comes back down, I win because I took some profit on a part of the position. So it's kind of a win-win situation. I hope it comes back down. I'd like to reload, and I hope it comes all the way back down to 120. And just in case, for a refresher for you folks, the whole reason why we're doing this is because of this artificial support level at 120. This is the level that the Swiss National Bank said years ago. This is now years ago this happened. They said that they would not allow the Euro-Swiss currency pair to go beneath 120. They have stated repeatedly and recently that they are willing to buy an unlimited amount of currency in order to make this happen, in order to cause this support level to hold. They're willing to buy an unlimited amount of currency. So that's great news for us. It's sort of like going into a fist fight with Mike Tyson standing behind you. Yeah, I'm long. Euro Swiss, if you put like, and the funny thing is, right? Okay, I'll tell you the funniest thing about all this is you see this move here? When this starts to move up, there's actually shorts that are covering. So you know what that means? That means somewhere out there, somebody was dumb enough to short this currency pair as it came near the prescribed support level declared by the Swiss National Bank. I shouldn't say dumb enough. That's really a value judgment. Who knows? Maybe they would have been right and I would have been wrong. But not in this particular case, though. I really don't see it. And here's why. I mean, why would anyone short this? Well, there are certain things in trading, in the world of trading, that stick with us. And I think one of the things that sticks with us is the idea of breaking the bank, like George Soros did in 1992. George Soros broke the Bank of England, right? And shorted the pound, and the Bank of England couldn't support it, and the pound went crashing through, and Soros made $1 billion virtually overnight. Although, to hear Mr. Soros tell it, it was closer to $2 billion that he made overnight. But, what's $1 billion between friends? The point is, someone out there probably thinks they're the next George Soros, so they're shorting this coming down toward 120, thinking it's going to break, and they're going to make a lot of money, and they're going to break the Swiss National Bank. I don't think that's going to happen. But you know what? Difference of opinion, that's what makes the market. In order to push the price down, somebody has to be selling. So whoever out there is trying to be the George Soros of Euro Swiss, please sell more, okay? Push this sucker down to 120 so I can load it all the way up. Excuse me. Okay, got a little excited there. Okay, all right, let's talk about dollar CAD because I got a question coming in from one of you fine folks out there, one of our listeners saying, Ed, I'm seeing the dollar CAD is heading back toward 110 again. Do you still have your plan set to sell if 110 is touched? This is a tough call because, I haven't shorted it yet, but I sort of have a plan in place, a sort of a interesting plan in place. Because remember when we said, when this came up earlier, and it didn't quite touch 110, we wanted it to come through and really take out some orders and really get some longs interested. I think at the point we're at now, I think it now becomes a very interesting trade because now you've run this all the way up. The high is 110.58 was the high. So that means it's breaking out to new highs. It's the highest it's been since April. So you're breaking out to multi-month highs. I'm sure and look, this begins to look a lot like an inverted head and shoulders breakout, correct? Look, if I just make this a little bit bigger, right, or just slide it over a little bit, ta-da, inverted head and shoulders breakout happening right now. Now, so technically speaking, you could take the trade on the long side, but I like the idea of shorting it if it now turns and falls back down to 109.70. I kind of like the idea of taking that. Here's the thing. The dollar has had an amazing run, and everyone is now assuming, and I may have mentioned this to you earlier, but at one point earlier this week, CNBC began reporting that the Fed was going to change the language of its monthly statement. to indicate that interest rates would go up faster. Now, don't you think maybe that's priced in a little bit based on this rally? I mean, that's a big rally on the dollar here. So, I mean, you could go long dollars at this point, you know, and maybe it'll work. You certainly would be going with the trend, but let's just brainstorm this with me for a minute. If let's just say the Fed changes the language next week. They're going to remove the words considerable period of time, as in interest rates are going to stay low for a considerable period of time. They're going to take that out. That's what everyone is saying that they think is going to happen. And which means to the public that rates will go up in less than 6 months. Considerable period of time is generally accepted to mean 6 months. So if you take that out, that means less than 6 months rates will be going up. So it would be natural to assume that the dollar would go up on that language change. But here's the thing. If we had simply paid attention to assumptions all along, we'd have been wrong about everything. And the fact that this has run up the way it has here, I mean, this has been a multi-month rally since the beginning of July. Now we're into September. Dollar's been rocking now for months. I don't have a problem shorting the dollar CAD if it now slides back below 110, because now it's really come up a lot. So I don't have a problem with shorting that. And heck, if I'm wrong, I kind of laid it out here for you guys, but it's a tentative plan. I'm thinking of shorting at 109.70. At why? Because that would say, okay, we've come all the way up here, and now if the price falls underneath 110, put yourself in the other guy's shoes, right? If the price now falls beneath 110, how is it going to feel for all those people who just went long dollar CAD? They're going to be pretty disappointed, and they're probably going to be looking to get out, so they're going to be looking to sell. So if it comes down to here, that's going to put pressure on anyone. Remember, people who bought up here, and some poor guy bought all the way up here. If it comes down to here, all those folks are going to feel pressure. I'm going to put the stop. Right now I have the red line above this high, but the truth is, if it comes higher, my stop's going to be higher. My stop's going to be above the high of wherever this thing stops rising. So if it goes up even higher, my stop will probably be higher. Okay? As far as targets, but as of now, the high here is 110, I think 58. I've got the stop tentatively placed at 110.65. As far as targets, I've got 3 targets for you. Let me go through them so I can explain to you why I chose them. You can see that, you know, there are some I drew a Fibonacci on here, and where did I draw from? I drew from this low point right here, right? I drew from this low point to this high point. And the truth is, those fibs, right now that the price has moved higher, those fibs are probably not that helpful. So let's take the fibs out, and let's just look at this in terms of real simple numbers. Okay, target 1. Simply put, it's above a round number, 109, and I made my first target really easy. 109.70 down to 109.10, a mere 60 pips. And if I can make 60 pips, I close a third of the trade, I move the stop to break even, and now I know that I'm going to have at least a small winner is my worst case scenario. Second target, very similar philosophy here, 108. And you can see that there's also support down here. You see that the wicks come down here and bounce up. So the price, Dollar Canada found buyers down here before near 108. So fine, I went with 108.10. Again, I'm cheating up 10 pips ahead of that number. 10 pips up above 109, 10 pips above 108. Why? Because not just because of the round number, but this is a very clear support level here. And if you went back to this area here, the other so-called shoulder, then yeah, that one as well. The third target, you see this patch here? Some people would aim for the bottom of that. I'm aiming for the top of that. It's a little more conservative. It's a little less aggressive to do that. If you're aiming for the very bottom, then you're really asking for a miracle. I don't like to ask for miracles. 106.85 would be the third target in this setup, which at this point is hypothetical, right? Because right now the price might just continue going up, and I might just kick myself saying, well, Ed, why didn't you go long on the inverse head and shoulders? Now, think about this for a second. An inverse head and shoulders is a reversal pattern. And in order for a reversal pattern to have meaning, you have to have something to reverse. Now look, this is not a huge sell-off here. I mean, if you see the pattern, you know, if this price runs way up and then you see a top, the price runs up thousands and thousands of pips and then you see a top, that's one thing. The price comes down a couple of hundred pips and you see a bottom, I can't get that excited about it. So really, I'm not that enthusiastic about going long on that inverted head and shoulders. Is the shape correct? The shape is correct, but the location could be better. And that's really, it's like real estate, right? Location, 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 right? I'm not too thrilled about the location here. And because there just wasn't that big of a sell-off leading up to it. Okay, so yeah, great question there. And so it's still intact as a setup, but I haven't acted on it yet. I might. We'll see what happens. Just remember that you know, the conventional wisdom has just gotten creamed over and over again this year, especially with things like the dollar. Conventional wisdom said that the dollar would strengthen at the end of when the beginning of the end of quantitative easing would cause the dollar to strengthen. That didn't happen. The dollar weakened. Then it strengthened at the end of quantitative easing. The end, not at the beginning of the end, but the end of the end, if that's not too confusing. Okay. Here's another question on the top and bottom patterns. You know what? That's a stock question. I think I'll save that one for last. Hello, Ed. Thanks for your breakdown of non-farm payroll. It was your best yet. Thanks. Ed, money is flowing into the U.S. dollar from all sides. Has the dynamics changed in the sense that investors flock to the dollar because of the recovering U.S. economy? You know, I think money flocks to the dollar for a lot of reasons right now. Is it so much an economic recovery? I don't think the U.S. economy is that strong, but I think Europe is that weak. Think about that, right? It's like Europe, the U.S. looks pretty strong compared to Europe. Europe looks terrible. I mean, you have negative 0.2 GDP in Germany. You have prices that are falling. And now the sanctions, right? If Europe goes through with sanctions against Russia, that's going to, what's that going to do? It's going to cut off inflows of money into Europe. A lot of that Russian money goes to European banks, and that's not going to happen if these sanctions are enforced. And so I think money's flying out of Europe too to come to the U.S. Continuing on with the question now. In the past, it used to be that the U.S. dollar did not benefit, but the risk on currencies. Can I take that as a change in the way markets perceive risk on and risk off? Wow, this is a great question, because this is the questioner is correct here. Times like this, the dollar would tend to weaken. I mean, stock market's strong, right? And dollar would tend to strengthen during times of fear. But you would think also, for example, that gold would strengthen during times of fear. Gold is not strengthening. Gold is crashing. You would think that energy, like oil, would strengthen during times of fear. Another lower low for oil. It's crazy what's happening in the world, and these commodity prices are falling. All right, so again, there's a really weird disconnect. I think things disconnect because central banks, when they get too involved, they print too much money. They don't really think about, or they don't really understand the consequences. And listen, I'm not just saying that. You could go back and find a speech by Bernanke where he pretty much admits that the whole thing is an experiment. So I don't think it's a change in the way markets perceive risk on and risk off. I think they love the dollar because they are running from the euro, and I think that's got more to do with it than anything else. Europe is 30% of the world's GDP. Think about that, 30% of the world's GDP. And, you know, U.S. stocks are outperforming European stocks by a wide margin this year. If the sanctions kick in and it cuts off the flow of Russian money, then European stocks are going to go down. European banks are going to go down. European banks could find themselves in trouble. It wasn't that long ago that they were worried about European banks, some of the European banks were in serious trouble. Well, the conditions are ripe to have those problems all over again. I think, why were the global banks in trouble 5 years ago? It was a liquidity issue. It was a lack of money, lack of capital. That's why they're printing all this money. They got to grease it. They got to keep the liquidity going. Well, if you employ these sanctions against Russia, and I'm not saying it's the wrong thing to do morally or the right thing, but I'm just saying as in thinking economically here, you employ those sanctions, you are cutting off all that Russian money from flowing in. And what do we say in the world of currencies? Follow the money. If the money's flowing in, the currency's going to do well, and the stock market's going to go up. And you know what? And if it does, and if you cut that money off, the currency's going to go down, the stock market's going to go down. So I don't think we really have a change in the way that we perceive risk on or risk off. I think it's a unique situation. I think that, you look at the chart of the euro. I mean, they are running away from Europe, right? Now, maybe it's going to bounce. I don't know. It's a little diamond here, right, or a little pennant. Maybe this thing bounces soon because it's been massacred, it's been crushed, right? But I don't think it's a change in the way things are perceived. I really think it's a unique situation. Europe is in trouble, man. Quantitative easing is coming, or asset-backed purchases, pretty much the same thing, right? Sanctions are coming. I think it was just today that I saw come across the newswire that Ukraine has only 75% of the amount of natural gas they're going to need to make it through the winter. As the weather turns, I mean, bad things can happen out of this. So anyway, let's move on. So anyway, I don't think the world has changed that much. I just think it's just a reflection of the way things are right now. Stock question. The top or bottom patterns that you search for using the 2020, do you look for pullbacks of stocks or strictly reversals? Mostly, that's a great question. Mostly I'm looking for reversals on 2020. You could do pullbacks, but like pullbacks is something like I've used the Blaster more for pullbacks on long positions, and 2020s I use more just basic pattern recognition stuff, head and shoulders, double tops, inverted head and shoulders, things like that. But the thing is, you'll be surprised. I mean, you run those scans, and then you start scanning all the different stocks in there, you're going to find them. I mean, they're out there, they're always out there. I run the scan, and then I look through the different, flip through the different charts, and you say, wow, okay, you're not every chart, but, maybe 1 out of 10 you're going to see a reversal pattern of some type showing up. And it doesn't have to necessarily be a reversal pattern. It could be a continuation pattern, right, like a flag or something of that nature. I mean, it just needs to be something technical to go with something fundamental, right? And 2020 is really a fundamental strategy that adds technical for the entry. So it doesn't have to be reversal. It could be a continuation pattern like a bull flag or a bear pennant or something of that nature. Okay, great questions though. Okay, wow. And I got, and by the way, really nice email from someone. I'm not going to read it to you. It says it's not for class, but someone just said some nice stuff, and I appreciate it. Look, we enjoy what we do here, but there are other things happening that are, we'll get into that later. Let's talk about some stocks here because, okay, man, we've had a lot of good days lately. Today was not a good day, okay, for our stocks. Well, I'll tell you what. Apple has done well for us. Nice big green apple there, and bounce off that trend line, which just happens to coincide with the 50-day moving average. And by the way, if you saw Mad Money with Jim Cramer on Tuesday night, I gave him this chart, and he analyzed it. Nice bounce off of the 50-day moving average for Apple. I'm very disappointed though in the iWatch. It's a watch, and I think watches are stupid. I mean, I don't wear a watch. I haven't worn a watch in 10 years. Why would I wear a watch? I have a cell phone in my pocket that tells me the time. One less thing to worry about. That's the way I look at it. I'm sure I'm not alone. Okay? And I figured Apple was going to come out with this amazing watch that was going to, like, you know, analyze the food that I'm eating and stuff. And boy, I feel stupid now because they sure didn't. Or they just came up with a watch. I'm very disappointed. But you know what? Some of the other things they came out with, the iPhone 6 is going to be very, very popular. It'll probably be, they're going to start doing bigger screens. Will it cannibalize the iPad? Sure it will. But you know what? It'll also make their phone very, very popular. And it's going to, I would just like to point out that Amazon is now selling its phone for 99 cents. Amazon introduced a new phone a few months ago. Now it's 99 cents for a phone from Amazon. What does that tell you? Okay, so they're going to sell a lot of iPhone 6, and they're really coming after Samsung this time, who has the large screen. They're coming after them, and they're going to cannibalize they're going to cannibalize the iPad. So what? So what? You know, they'll come up with something new to replace it, because you know what? It has to go sooner or later. Okay, so we're doing great with Apple. Thank you, Apple. Pretty close to all-time highs on Apple. I'm not the least bit worried. I'm not worried about Apple, but if it breaks that 50-day moving average, then I would be worried under those circumstances. Other longs that we have, right? Well, with the Dean Foods thing, we're still sitting there. There were more buyouts in the food arena this week. Someone called Annie's was bought out, organic mac and cheese. We actually have it here in the house. My daughter loves this stuff. They got bought out this week. But Dean Foods continues not to be bought out, but I think that'll change someday. J.C. Penney is just a monster for us. It really looks like, I guess I can take that little flag out here. So our longs look amazing. Let's just put it that way. Our longs look amazing. We had a huge run in J.C. Penney. It's forming a little consolidation here, like this, like a little box. And we'll just parallel that here. So it's obviously having a tough time getting above this line. That's about 1125, I'm going to say, that line right there. 1125, Penny's having a tough time with it. But it tries once, it tries twice, it tries three. It will not give up. I do think Penny's going to break there and run higher. We're already up a ridiculous amount on this stock, like 30%. We bought it at $8.60. It's $11.14. Guess what? I think it's going higher. And now, the funny thing was, I got to tell you, my colleagues, people that I speak to who are in the market, a lot of them thought I was really wrong about Jay. How can you make money on a company that loses money? Simple. Look at the chart. And I went to the stores too. And I walked around in the stores and I said, well, you know what? They're not setting the world on fire, but it's not getting worse. And that was the key. It wasn't getting worse anymore. People used to love JCPenney. They changed JCPenney. Then people hated JCPenney. It's not like they could never fall in love with it again. And they are, slowly. They're coming back. So this is going higher, I think. So good news for my longs. My shorts, well, that's a different story. Boy, I tell you, I've had so much success on here with you guys, and it always makes me happy to talk about successes, but we have to talk about failures too. My longs are doing great. My shorts are getting killed. Well, not all of them. I mean, Kimberly-Clark, it's basically right where we shorted it. And look what's about to happen to Kimberly-Clark. The 50 is about to cut under the 200. You're about to get what we call the dark cross here, where the 50-day moving average cuts under the 200. And anyway, look, any stock that's under its 200-day moving average, probably not that great to own right now. So yeah, we're short and happy. But man, Lulu kicked my butt today. Look at this thing. It gapped up. Short covering. They reported, it was either earnings or same-store sales. Something looked good about the company. Shot up. Ouch, okay? That hurt. That hurt. I hate when that happens. We're short LVS, Las Vegas Sands. That came up a little bit today. We're short Wynn, W-Y-N-N. Ouch, that came up a little bit today. But these two aren't hurting us. The Kimberly-Clark isn't hurting us. But we had just closed out TJ Maxx, which hurt us. And Lulu's not really hurting us yet because we were up on that trade. We were up on that trade, but now we're down on that trade. And I still think it's a downward-facing dog for all you yoga enthusiasts. But it ain't today. Not today it isn't. Okay? All right. Folks, that's going to wrap it up for this session. I enjoyed speaking with you. Again, my name's Ed Ponzi. If you do have questions, please send them in to info@edponzi.com, and we will continue to try our best to answer all of your questions. Thank you again for your time and attention, and have a great day.